Hi, along with a good jump into the Indian stock market, we people are observing public listing market also swelling like anything. In fact, more than 50 companies has already taken an approval from the SEBI and they are waiting for the right opportune time for coming for the IPO. They are waiting for the good market condition and their own performance. This is $45 billion pipeline of IPO. This is not enough. In fact, more 50 companies have filed for their draft and they are waiting for the regulators' approval to file for the IPO. In fact, this all momentum started in last year in 2024. 2024 was a bumper year for the IPO where 36 companies raised 36,000 crores. And this momentum could not continue due to the global uncertainty, geopolitical crisis which arrived in the month of September and the pace slowed down. In a similar fashion, in 2025, nearly 24 companies have raised around 41,000 crores from the IPO market. And we feel the reason for this good IPO market is the de-escalation of the global tension, Trump's easing out policy, which is expected, along with the good GDP growth and also the interest rate coming down. These all are favorable conditions for the good IPO market. But in this flood of IPO, there'll be a lot of volatility which Indian stock market will face, and it will bring a lot of confusion in the investor's mind that for which IPO to go for and which IPO to not go for. So it is very important that we create a clear guidelines that how to evaluate the IPO. The first factor which we have to consider is do your own research. We have to read RHP, which is Red Herring Prospectus, which contains all the financials of the company along with the investor's background, risk, reward, and also the business model of the company. The second thing which we have to consider is you have to assess the valuation of the IPO. We have to compare the price of the IPO with the peer listed companies of a same sector and see it should not be that my IPO is listing at a very high price. The third thing which we need to check is we need to check the use of funds. It should not happen that the new money which is being raised by the company is going to the existing shareholders, which is offer for sale. It should ideally go for the company's expansion into research and development. Prefer those companies which go for the business expansion. The third factor which we need to consider is we have to see that how strong the demand is from the anchor investor and the QIP. It is more preferable that if the demand is high from the anchor investor and QIP, then they are good IPO. The confidence is high for that IPO. The fourth thing which you have to consider is that we should not chase hype. Mean to say that those companies which are endorsed by a celebrity or your good friend is also making an investment. So there's a herd mentality to make investment. We should not go on the face of making investment into the IPO because it has been done by your friend. There are many other factors which we need to consider. Therefore, it is very important that you consult your existing financial advisor and take a right approach for the IPO. Thank you. Happy investing.